And now to the world of Shamu. Do killer whales equal killer stock performance? Well, shares of Seaworld Entertainment have soared since the company made a splash last month through a $702 million IPO. That's the largest in the leisure sector since 2007. And the company's first quarter earnings report since going public, its first quarter loss narrowed by nearly 11% thanks to a 12% jump in revenue. So what's going to keep Shamu's home on a steady revenue course? One word for you: penguins. And joining me now, Jim Atchison, President and CEO of Seaworld Parks and Entertainment. I want to talk about penguins because they're just so darn cute, but we're going to start with your earnings first. One of the highlights, Jim, to me was that admissions revenue was up 14% and food and merchandising revenue up 9%. How did you achieve that jump?
I'll tell you, we're pleased with the results of the first quarter, and what we're seeing is really the result of the strategies we've put in place, and that is really a focus on pricing discipline and some sophistication we've introduced into particularly the admissions products that we have. We've built e-commerce platforms, mobile commerce platforms, where we're able to sell more of our tickets direct. So accordingly, we're able to have more control over channel management, and therefore really that helped bolster our admissions revenues by about 14%, and then couple that with our in-park success, and we have overall revenues up about 12%.
Now you are, like I mentioned, have a large expansion opening tomorrow. It's Antarctica, Empire of the Penguin. It's about 230 penguins. Can you talk a little bit about the capital expenditure requirements when you're dealing with 230 penguins?
Well, I'll tell you, this is a phenomenal attraction. I started in our company as a teenager, actually, parking cars a few decades ago, but I've never been more excited about an attraction. So, this is a new concept, a new village for our Orlando park, and we take guests on a whole journey through the life of a penguin on a really a world's first unique ride vehicle. There's no track to it, so the vehicle glides on across the floor like a hockey puck, and you really learn all about a new character, Puck, and you exit the ride inside our penguin habitat with, as you said, 230 penguins. So as you can imagine, this is a major investment for our company, and one that we feel very good about, and our preliminary response as we have kind of private openings and viewings has just been phenomenal. So we're very excited. It opens tomorrow.
Jim, how often do you have to put in a new event, a new ride, a new theme, etc., to drive people into the park?
Yeah, the business really does need new attractions, and there's a lot of ways to get to that. And we have really a terrific product development process we deploy throughout our company, where we look many years out. For example, this Antarctica attraction we began looking at 42 months ago, 3.5 years ago. And so we really take a long lead on this, and the business does need new attractions. You need things to talk about. However, they don't always have to be of this scale. Sometimes a real benefit of our company is when we make show changes. Our shows are so popular at our SeaWorld parks that they really are so well received. So, whether it's a small attraction, a show refresh, a major attraction like Antarctica, we're always looking to have something new to talk about.
Sure, you have something new, but then you have to pay up for it. But you've also said that you're trying to rein in your capital expenditures to an average of 10% of total revenue starting in 2014. How do you do that when you have to put up so much money for the new exhibits?
Well, if you look at, over kind of a historical term, over the longer haul of our company, we've operated at about that level for many, many years. What we have right now is some significant stepped-up investments we've made because we're in a little bit of a capital drought during our last couple years as a subsidiary of Anheuser-Busch. So this is really some catch-up capital, and the normalized run rate of about 10% is a cadence we've done before, and we feel confident we can do that.
But Jim, Fortuna Advisors has said, I just want to read this to you, said that SeaWorld will need to grow CapEx by 27% per year from now until 2017 in order to achieve that 30 million attendance by 2017. I mean, what do you say to that?
Well, that would be an extraordinary amount of capital, and I'm not sure the details behind how they built their model, but what we do know is that the normalized run rate that we've guided to of about 10% of revenue is completely adequate for us to kind of get to our plans and make the most of the business. We really have tremendous opportunities for growth, and they don't all involve capital. We launched a television show last year on ABC called Sea Rescue. It's a top-rated show in most major markets. tickets. We're now in our third season of that. It's a tremendous success. We had 27 million viewers, and really that's not a capital attraction, but it's a great way for us to leverage the significant IP we have in this company.
Jim, I sat down with another Jim in your business. He is Jim Reed Anderson, the chairman and CEO over at Six Flags, and he told me that the key to making these parks successful is to incentivize people to come back. They do that with season passes, and they find that repeat customers tend to spend $17 on average every time they come through. How are you doing that at SeaWorld?
Yeah, that's actually a good comment, and I would tend to agree with Jim, who's a friend and does a great job at his operation as well, I'll point out. We really do focus on having repeat business in our parks, and we kind of separate the pricing algorithms, if you will, for the local and nearby market with annual pass products, where you can come back to the parks and visit throughout the year. And then on the tourist side, we really are focused on selling multi-park, multi-day tickets. So take Orlando, for example. We have 3 parks in Orlando, and the vast majority of our visitors to our parks are on multi-park, multi-day tickets. So it's really less about a single-day ticket. It's more about the repeat visitor.
Jim, I wanted to sort of broaden out here and talk about taxes, everyone's favorite topic, right? Tax reform for corporations was really front and center in D.C. this week, but you aren't paying any taxes here in the U.S., even though your revenue grows. Can you explain to us why that is and how long it'll last?
Sure. What we're doing is the same thing many other companies do under the tax code, where you're in a scenario like ours. To give a little history, we were an embedded subsidiary of Anheuser-Busch for many, many years. So when we exited the company, we ended up having a significant basis step up that gave us accelerated depreciation, if you will, that will shelter our tax burden for some period of time, maybe over the next 3 or 4 years per se. So that is it makes good sense. It encourages investment in the business. If
but
you
does
look
it run
at
out? Does it run out then by 2018? Is that what you're expecting?
Yeah, it will. It would run out at the current pace we're on by 2017-18, somewhere in that period of time. And if you look at we were a private equity firm with Blackstone, and this type of shelter encourages investment. That's why it was created. And as you've noted, we've spent significant capital over the last couple of years. So I think it actually is in place and it works. And when we had a major step up like we did after leaving Anheuser-Busch, it's a shelter for some period of time, up in our case through around 2017 or 18.
All right, Jim Atchison, the CEO of SeaWorld. Congratulations on your new Penguin openings. We'll have to come and visit. Good to have you.